In the past, I've used a bunch of different financial websites in order to try to gather data about companies that I'm researching. My favorite to this point is Morningstar, which is a financial company based here in Chicago. And recently they did a big UI update, which I'm not a big fan of, but I do love their key ratios page. Also in the past, I've used Yahoo Finance and other websites like that. But honestly, none have come close to this new one that I've discovered, which is called TIKR. Now, I have featured TIKR in a couple of videos in the past where I show relevant financial data for specific companies, and TIKR, where it especially excels, is with international companies. So most of the time when I'm starting to look at a company, I'll actually go to TIKR first instead of Morningstar. One frustrating point with these websites is that Morningstar, Yahoo Finance, TIKR, none of them had very good screening tools, or in some cases, no screening tools at all. I've tried to use screens for Morningstar and Value Line, and pretty much they just yield pretty crappy results. Due to this frustrating lack of quality screening tools available online, I ended up coding my own screens, and of course that's going to be a lot more time consuming than using a product that's already built. Luckily for us, TIKR has announced that they've released a global equity screener. Now, I have very high hopes for this screener because of the quality of the data that I find on TIKR. The experience is wonderful, and I can't recommend that website enough. So right now, this is available for free, and some of the key points are that they offer over 60,000 equities across the globe. So basically, you have a worldwide access to any company that your heart desires. Another great feature of the screen is that the data can go up to 15 years in the past, which is really great for investors because it is important to look at the past history of the operating behavior of a business, even if it's not necessarily going to directly predict what the future of the business will look like. I'm pretty sure Buffett has said in the past that he reads at least 10 years of annual reports going back, and for some companies, it's probably a lot more than that. So this screen is going to combine the robustness of TIKR's data and information set with the power of a user-friendly and buildable screen tool. So in this video, I want to play around with the screen, kind of get to know how it works, and maybe build a couple of screens out that could be helpful for us, or just, to teach us about how to use this tool more effectively. TIKR has been a huge value add for my investment practice, and it's one of the first places that I go to start investigating a company. So I would totally recommend everyone sign up to TIKR. I do want to point out that this video is not sponsored by TIKR, and I don't get anything right now if you use my referral code to sign up to TIKR. However, in the future, TIKR will have a retroactive referral program. So if you do want to support this channel, then please use that code because it might help me out in the future, and I would be very grateful if you did so. Thank you so much. Okay, let's hop over to the computer and check out what this screening tool can provide for us. Click on Global Screener, and this is my first time on this page, so just keep in mind I'm learning as you are. So we click on the global screener, and it appears that it has filled out just a basic screener for us that includes information. We want to figure out the last market cap, revenues, free cash flow, forward PE, and gross profit margin for any company in their universe of 60,000 stocks. I'm going to collapse this menu here on the left and make this a little bit bigger for us. So here it seems pretty standard. Say you want to find a company that's greater than this amount. You can also change the operator to greater than or equal to, less than or equal to. This display only, I'm gonna have to figure out what that means, but let me just go ahead and fetch this screen. And right away you can see that whatever the numbers they put in here seem to be yielding some pretty excellent companies. At the top of the list, you got Google, Facebook, Alibaba, Tencent, companies like that. So I want to see what this display only number is. So I'm going to go ahead and, for the revenues, change that to display only. So here we have a revenues column. Let's see if that changes anything about the... It did change a few of the names up top. So we have Samsung and Walmart have moved higher. So I'm assuming that it's not taking into account that metrics in the actual screen. It's just going to display that as a column in the table. So as we can see, yeah, Walmart is nowhere to be found on the original screen. One thing I'm noticing right away is that they have, for this free cash flow, you can do value, percent margins, percent change year over year, and the compounded annual growth rate, which are really important metrics and I think will help screen for excellent companies in the future. You can add conditions to the screen. So say I want to look at, I want to find a company that is one of, let's say, Europe, then I will fetch a screen, and then we should only see companies that are listed in Europe, which so far is the case. Okay, now I'm going to add a screen so we can just start from scratch and kind of play around with this. So I was thinking maybe I would try to build some sort of a net screener, because that seems like one of the easier ones to build, and I want to see maybe how robust this screening tool is for that. So I'm going to click to browse all data here. If we're in this menu here, we can sort of explore all of the different metrics and data that we can use to build our screens out. So this is not very helpful. So them being subdivided into categories is a lot nicer. Companies, so you can get market cap, prices, regions, industries, countries, things of that nature, enterprise value, all very helpful metrics, or at least for displaying within the screen. Then valuation, TIKR provides some helpful ratios for valuation. So if you prefer to use any of these, forward total enterprise value to EBITDA or to revenues, any of these metrics, if that's your stuff, then they're right here for you. Forward price to cash flow per share, that seems like it could be a useful one to look at. Income statement, we have all of the usual suspects. Revenues, I'm sure net income's on here. There's research and development, stock-based compensation. That could be a very interesting one to screen by. But the balance sheet, we have more quantitative metrics such as net debt and tangible book value, for instance. Cash flow, you can see the net income here or the unlevered free cash flow, things of that nature. And then all these ratios, which can be very helpful for trying to determine the quality of management with return on equity or return on capital. And we also have net debt to EBITDA, things like that. Balance sheet is going to be really important for this. So let's check out the net debt. So if we have a negative net debt of value for the fiscal year of 2020 is less than 0, then we should get all the companies that have a net cash position. So right away we can see Apple at the top of the list. They have almost $70 billion in net cash, and all of these excellent companies, you can notice a trend. They all have cash balances. Apple, Microsoft, Alphabet, Facebook, Tesla, that's a surprise, Alibaba. And then way down here, I even noticed we have Prosus. Net debt is important, but I also want to compare that to the current market cap of the company. So we can see if maybe a company is trading for less than the cash balance on its balance sheet. So let's add a condition to the screen. I want to look at the last market capitalization, and I want it to be less than, I wonder if, so that's one thing that I'm not sure how to do. I want to compare it to whatever number this is here for the company. So for last market cap, I want to see if Apple's market cap is larger or smaller than $70 billion. I'm not sure we can do that right now. Okay, so that's one feature that I'll be looking for, and hopefully that'll show up as I continue to move through the screen. If not, I understand that is a complex screening action, so we'll just see. Either way, I'll put in a limit so that we are only looking at small caps for this space. So let me put in $500 million. So I want to be less than or equal to $500 million. So this should yield all of the companies that have a net cash position that are less than $500 million. Now, $500 million, I choose that because that's the number that Prabrai says that he's looking for spawners at that price. All right, so I just ran this screen, and it does appear that while I can't directly search for the market cap compared to the net debt, it does provide this column in the table, so we can compare directly a company with a net debt position of negative $107 million versus their market cap. So it looks like this Japanese Nippon Pillar Packing Company has a net cash position of $107 million, and their market cap is $500 million. So that's a bit of a gap there. I would want to see the quality of the business from there, but if we're just looking for a pure quantitative approach, then I'm going to turn this screen on its head. So here things seem to be getting a little more interesting, where I've reversed the sorting by the last market cap, and a company that has a 7 million net cash position actually is trading for $0 million, which it has some market value, but it's rounding there. So I'm going to refine this a little bit more, because when you're dealing with small companies like this, it does look like the market cap data can get a little funky. So I want to do a greater than search for, let's say, greater than $1 million. So hopefully that will clear up some of these $0 reported issues that I'm seeing. And then I'll add another net debt. Then I want that value to be less than -1. So really my approach from here would just be to scroll down this list, and we can look at companies with the negative net debt balance greater than their market cap. So for instance, we have this Trans Freight Containers Limited company. We have TCU, which seems to be a German company. As you can tell, all of these tickers are in numbers, which means they are not listed in the United States. So for my purposes, I think I want to do a geography search. So I'm going to click to browse all data, and then just type in geography, or maybe country. That's what I want. Country is one of United States and perhaps Canada. And then I will fetch screen. Okay, so here we go. The universe has shrunk quite a bit. Another nice thing is you can collapse this screen, so then you can only focus on the results that you're getting. So here is pretty simple. I've done this basic screen, and it's returned almost 2,000 results. So that might be quite a lot to keep you occupied. Their cash on the balance sheet is triple the amount of their market cap. So let's click on this 49 North Resources. Now I'm guessing it's some sort of investment firm. Okay, it's a venture capital firm specializing in seed capital and early stage investments. So it looks like they're going to be investing as venture capital into mineral exploration, oil and gas exploration. The problem with companies like these is that it's probably unlikely that the shareholders of this company are going to see that cash anytime soon. So you basically have to rely on the returns of their venture capital portfolio. They're probably not going to just distribute that cash to you. So this company might not be a great opportunity, it might not be worth spending time on, but it does show up on the screen, and the discrepancy of cash to market cap is there. So it's probably worth at least spending a few seconds on. Okay, what if I wanted to do companies that actually might have some quality to them? So maybe we can go to the ratios and look at companies with a decent either return on equity or return on capital. So let's do this return on capital percent. Compounded annual growth. We want to go down to the 2020 to, 2005 to 2020. Let's see what this yields. I have no idea. Greater than, okay, let's say greater than 10%. So we want a company that's growing its return on invested capital at greater than what the S&P 500 historically has done. So if we take a look at the results of this screen, we see a company called the Dewey Electronics Corporation. So this, although the net cash position is $5 million less than their market cap, what I'm really interested to find out about is this 71% return on invested capital compounded annual growth rate, because this is what I would say a quality screening metric, this ROIC, as opposed to the net debt, which is more of a quantitative screening metric. But really any company on the screen has a potential to be a decent company because of this compounded annual growth rate of their return on invested capital. The management's capital allocation, depending on the length of time that they've been in operation, can tell us a lot about the quality of the company. So I'm going to click on the Dewey Electronics Corporation. I know nothing about this company. Design and manufacture compact diesel power generators, hybrid power generation systems. Okay. They do this vehicle auxiliary power units for military markets worldwide. Let me just change this to the last 12 months. There's no point in screening for the last year. We want to know the most recent information for the net debt information. And then the ROIC, we can just do that too. One thing I'm noticing Morningstar has a slight advantage on is the amount of dates that they'll show for these key ratios. As we can see, their return on capital has been a little lumpy, 18%, 34%, 10%, and they had negative 50% back in 2017. So this is a company, but just by looking, it looks like a lot of losses happened this year in 2017. So just by looking at these metrics, you can't really tell much. You're definitely going to have to dig deeper into the company. I'm not going to do a full analysis on Dewey Electronics Company, but it is interesting to see what the screen pulls up. Sometimes these metrics like return on invested capital or return on equity can be a little misleading because we're not entirely sure how many years of history they're compounding at that rate, and if it's sustainable or if something unusual in one year happens that skews the numbers in one direction. Okay, so I've basically been rambling on and on about this. Now I've created this Frankenstein's monster of a screen where I'm looking for companies with a net cash position that are trading at a decent return on invested capital. So there are tons of ways that you can slice and dice companies with this screen. We have a bunch of useful metrics. We have free cash flow per share, we have depreciation, capital expenditure. All of these are under the cash flow, which are very helpful for trying to predict the intrinsic value of a company. Income statement, we have everything you could need, looking at the revenues. And so if you want to see a company that's growing super fast, we could do this change year over year or the compounded annual growth rate from 2005 to say 2020. And if we want to see companies that are, I'm going to get rid of all of these. So we don't have too many results. There are only 43 in this list, but this might be an interesting way to find companies that are growing rapidly. So far I'm pretty impressed with the quality and the depth to this screen, especially because it's free. Now, screens aren't perfect, and there's a potential that you won't find anything or that you'll definitely miss companies by trying to use a screener. But it can give us a more focused hunting direction for finding either long-term compounders, net nets, or whatever kind of investment you're looking for. So that's a brief introduction and so far my experience with this screener. Now in the future, I do hope to build actual useful screeners, and I will share those with you as well. So definitely subscribe to the channel if you want to keep up to date with more of those screener videos. Anyway, thank you for watching. If you enjoyed this video, you may enjoy my video over here where I explore the investment case for Alibaba. Thank you so much for watching this video. I really appreciate your time. Please like the video and subscribe to the channel if you enjoyed this, and I will see you in the next video.